Good afternoon, everyone. This is Henry, and as we get into tonight's video newsletter, I wanted to bring you a name that I'm not typically looking at, but it really has a unique setup. I think that there's so much about good trading that is trading patterns as opposed to just one name solely, and the pattern here in Lulu is really pretty interesting. So let's start by taking it and looking here at the daily, as this is where the squeeze rests. And you can see a lot of really interesting things here because the squeeze is very mature, right? You have weeks of compression. So that's a full-on signal that is showing us the consolidation of this range. Then, if you think about it from where it's being sold off, 400 is a big round number, and a lot of times you can see those as being inflection points. So somewhat normal to be sold off from there. But part of why I gave you the title for the video of considering Lulu for its potential to double is because of the way this 618 retracement enforces the $400 resistance, right? So when you have a move like from 516 down into 226, as you chew back through all of that selling, the 618 of that tends to be one of your most important proportions. So you can see how that has worked really well here. And that's part of why I wanted to give this to you, because when you find Fibonacci proportions that are working well, what does it further imply? Well, if and when it can get through everyone that wants to sell it at 400, and that daily squeeze can get you through this zone, above the 618 opens the door to the 1272 extension. Now that's not going to be a quite full doubling of the company, but you get up into that territory, the 1618 of the move is 695, and that's getting closer, to that type of a return. Now I make no comment on this in time. Timing is always the art, and it could take a long time. I think the more immediate trade would be trying to get it above 400, and if I could capture the move into about 430, I'd probably call that good enough. But that's a very big pattern. It's a reminder that when you go through, or when patterns have this type of big down move, yes, it can be kind of sharp, especially if you're involved with them, but they set the stage for more significant targets. Because think about how if the correction had been very tame, and say you only pull back to right here, well then that extension is going to be smaller. But when you go through those big declines, it's going to make the extensions just that much bigger. And on the heels of that squeeze, I think that's one to be paying attention to. So I hope you find that a helpful addition to your watch list. We've got a lot more to cover in the premium video, so I hope to see you there, and we'll pick this up in the next review. Hey traders, this is Henry with simplertrading.com. I wanted to thank you for watching today's video. I hope you found it helpful, and if so, be sure to click the like and subscribe buttons down below. If you would like to also see me putting these ideas into action and trading my own account live in front of you, be sure to sign up at simplertrading.com, and I hope to see you in the chat room sometime soon.